Well, as we suspected in the dark pool activity we saw from Wall Street the last 24 hours, we ended up getting what we call an island reversal. Some notable ones that have happened recently have started new trends. So will this begin a new trend itself? Hello, ladies and gentlemen, and welcome back to the Daily Show. We talk about stocks, commodities, and cryptos. We'll be talking about that and more in today's video, along with our thoughts on the ADP jobs numbers, pushing interest rates to new highs on the US 2-year, freaking the market out. A possible foreshadowing of the earnings season coming up, with Levi's saying that the outlook is starting to get a little bit grim. And then, of course, forward PE ratios. We've got the JP Morgan update here for forward PE ratios, which is showing us 19.13, which is getting close to that magical one standard deviation too far above. Is it overpriced? On top of that, yield curves. Let's get into it. Well, welcome back everyone to the Daily Show, where we talk about the macro lead news and of course hottest charts. They're all coming your way for every one of the markets around the world. If it's your first time here, welcome to the community. Subscribe, smash that like button, and of course, hopefully you enjoyed today's content. We've got a lot to cover here together. Let's discuss energy. Let's discuss also semiconductors. They were down pretty heavily on the day, along with banks. Even though interest rates went up, banks went down and they were sold fairly aggressively. Specifically, the Bank of America as well sold off quite hard. It wasn't really safe either for defensives, which we'll take a look at later on. But when we have a look now at some of the things coming through, it's interesting to see what retail and semi-pro investors believe. 46.4% of them are bullish at the moment in markets. And, you could definitely see why. But with that island reversal coming in, is that too bullish? Historically, yes, we haven't seen readings like this for over 2 years. Reminds me of something, 2020, when we had those really big bull runs, and 2021 at the start. But more importantly, this is now the highest bull read that we've had over the last 4 weeks, where things flipped super bullish on these reports. This is off the top of also seeing interest rates starting to hit new all-time highs. We've got the US 2-year yield later on in today's video, but take a look at this. Higher for longer, and terminal rates now really high, almost upwards of 4.5% potential chance of a terminal rate. So even if the Fed pivots now, according to the market anyway, it doesn't look like there's that many rate cuts on the horizon. And this is a big difference from where we were in March. If you're interested in following us on another platform, we do share a whole bunch of stuff on Twitter, so definitely follow us over there. And as I posted here, over 89% of stocks were down today. And at one point, it was actually 96%. So that's some pretty outstanding numbers. That was a broad-based sell-off, which we haven't seen in a little while. We've seen a lot of kind of minuscule sell-offs, or some sectors selling off, but not a broad-based sell-off. Could that tell us something else is happening underneath the hood ahead of this big thing, which is, of course, earnings season? It starts off with the banks. Then we get Tesla, which we kind of already know some of the numbers there. Then we have Netflix. And of course, we lead into the big week, which is all the tech stocks. By the end of the third or fourth week, we're usually through the main section of earnings, and we can start to see whether we have beats or misses. What were the big changes over the last 24 hours, though? Well, first up, almost a third of the market now believes that we're going to see a 50 basis point rate hike over the next kind of quarter. And that starts off with, of course, July now being a 92.4% probability of getting a new rate hike. I think most of us already knew that, the market does, but what a big change this is off only a few weeks ago, when people thought there was no more rate hikes. Now all of a sudden there is, and the market just doesn't seem to care just yet. It's starting to give a little bit of tension though into the markets, with the VIX spiking over the last 24 hours. As we know through JP Morgan's and Goldman Sachs reports, we've been seeing a lot of small trader call contracts coming in. No surprise to most of us out there trading and investing in these markets. But it kind of reminds me of 2020, where we saw that huge rally coming off the bear bust, and then all of a sudden everyone went bullish, super amount of calls, and we mean reverted. It's something we've been discussing here for, it seems like 2 or 3 weeks now. And of course, we started to see weakness last week, followed by that little pump that pushed the S&P 500 maybe a little bit too far. Let's discuss here S&P 500 in general with the data stats moving forward. If you're a bull, the stats are that because the first half was good, in general, the rest of the next 6 months will be okay. However, the kind of mean and median, it's not that bullish. It's like the best is over. Now we go into the potential chop. And it gets a little bit worse when we take a look at pre-election years. A lot of people go on about how good July, the next 2 weeks are. We've already shown the stats on this channel. I think it was 16 wins, 1 loss, considering the ratio that we had. Now, we had the bullish market. We saw the sell-off. It went bullish again, and now we're kind of sitting at these highs. But look at pre-election years. Not as good as the traditional stat. Then we often get this double bottoming that goes through August, September, October. And when we take a look at options a little bit later on, you can kind of see that maybe a few larger options traders got into some puts over the last couple of sessions. We actually saw 2 big ones that went through today in the markets. Here is the good thing about the rally. If you like the positive stats here, we always like to share these sides as well. You can see over the next 6 months, considering the stats we've seen so far, 81.8% of the time we are still bullish over that period for a pretty good median number. And it just shows you a little bit, depending on which stats we're pulling from there, it can be a little bit different. And I'm just showing you the pre-election year because I think, well, that's where we are at this stage. Let's have a look at July market performance. As we know, usually it's more bullish into the first 10 days and more bearish after the middle of the month. These are trade days, so make sure to keep them in, kind of your main focus. And let's move over now to the wonderful world of options. Did we see any big transactions? Well, we had a lot of sell-off across the board. 2 notables that were actually up, though, was Apple and Microsoft, the 2 kahunas. Why would they be up when everything else was down? Imagine if they did go down, everything else would have really sold even more. And the reason why is because people move into them to try to kind of, the move to safety, basically. They're kind of like a proxy safety net for traders sometimes. And I think that's part of it. But, I would still be watching these stocks very closely over the next couple of sessions. They also had 2 days of weakness before this sell-off that happened in the market. So maybe just playing a little bit of sit there while the rest sell off, and everyone probably tries to short these 2, thinking they're going down further, but they already had sold off 2 days before. PayPal, all the normal ones, had a bunch of unusual options activity. But if we scroll down, I think the most interesting thing here is we still have 55% calls going through. So even on bearish days, which wasn't a huge volume, 37 versus 39, we still have predominantly bullish statistics coming through in these markets. As I said, let's go over to the calls and the puts that were put through over the last 24 hours. There was a bunch of 0 DTEs calls actually coming in. But notice here some of the dates. Look at this one over here, Qs, puts, 330 strike, 2024. That's a fairly large position. Then on top of that, the other big put that I noted that was out more than just even 1 day was a SPY put down here, 418, bit underneath the market. And you can see, well, that's sitting for September. So couple of large puts. There was also one on IWM. They're the only ones going out past like a day or even 2 days. So realistically, they're the ones I'm going to be looking at a little bit more. And we started to see a couple of puts come through of size over the last 24 hours. Meta, Tesla, Apple, all of these stocks were the big ones. Verizon or VZ also had a bunch of unusual options activity. So it might be worthwhile checking it out on the charts, but always good just to see some of these large positions. And yeah, it was more of the same. I don't think there was too much unusual activity in those. Let's now jump into the charts though and take a look at, of course, our favorite, which is Magma here. We're looking for weakness in the big tech. And did it happen? Not really. Look at the daily. Long leg doji, pretty much Meta kind of like held it up last couple of sessions. Then, of course, Apple and Microsoft held this up over the last day. And you can see it's just a long leg doji. No turn on Magma and no weakness there. Now, where we did see weakness was high yield bonds. And a few of you have been screaming in the comments saying, Tom, you got to cover the high yield bonds again. Look at them go. Yeah, I did see it, and we do cover a lot of things. But yes, high yield bonds had been dropping for multiple sessions in front of a market that was basically just sitting like this. So when we saw that island reversal open, which we suspected was going to be potentially happening over the last 24 hours, of course, it led to further sell-off. And that's exactly what did occur. High yield bonds weren't able to recover too much. They ended up down 0.73. No new low yet, but if we do, and we keep seeing high yield bonds dump in the face of a market that's sitting, going up, or even going down only a little bit, in general, we want to be looking at the bonds. High yields or junk were one of the best readings for 2022. So we've got to be paying attention to those. Volatility finally spiked up on the VIX. We were up about 8.74%. We're up a lot more at one point. So finally jumping off 13 to 15. We're going to need a lot of days of ramp to get this thing back above 20, but of course that's going to need a flash sell-off. Will non-farm payrolls bring it, or is it going to be CPI, the inflation numbers coming out next week? Make sure to really be in tune with the news next week. We've got kickoff of earnings season, inflation, and non-farms, which is the jobs numbers in the US today, well, coming up Friday, today my time here in Australia. So that's coming out before the market open, and I'm sure it's going to move yields, and we'll talk about which one you need to set alerts on, because a lot of you probably got alerts over the last 24 hours on this particular pair. Let's look at the skew. No crush here on that, but it did get crushed the day before. We're looking for skew to start dropping off fairly substantially here, and it did drop off. That was good. Then we've rallied back up. We've now island reversal. I want to see the skew continue to sell. Put call ratio, again, we had those unusual puts. Interesting. Then we sell off the next day. Come in. We do know that we swiped the underneath 0.78 area just a little while ago, and that tends to lead into really a sell-off that happens only a few weeks later. So that's something that we've been watching on these charts. Central bank liquidity continues to weaken off as well. At the same time, markets are holding up very high. The biggest discrepancy we've seen in 3.5 years. And last time we saw a discrepancy this big, the Federal Reserve were actually cutting rates. So they were kind of stimulating the market at the same time as they were tapering off. So, you had one double-edged sword there, or at least a single-edged sword. Now you've got two problems. You've got a rate going too high at the same time they're tapering and actually pulling the liquidity out of the market at the same time. Will the market crack under that? For anyone that likes to think there's a recession coming, in general, we don't see recessions until we actually see unemployment start to go worse. Usually that means you're 6 months off it. And usually you'll never see a call of a recession until yield inversion of the 2-year, 10-year, 3-month, 10-year actually inverts. And that means it goes underneath the 1% again. So effectively, it needs to go away. The inversion needs to go away before we get a recession. This is the chart I was mentioning before, and I'm sure all of you pretty much had an alert on here. We got an alert straight after. Yield spiked above 5.07. Now, the one thing markets hate more than anything else is the fear of the unknown. So we've seen a lot of change on the yield curve. It's done nothing to the market. The market just keep crunching up. If we do see a spike up, an acceleration move on the yield curve, you watch the market hate it. We know that the markets are sensitive to fear of the unknown, and that could be something we're seeing with either a CPI or a non-farm payroll result. So watch the alerts. Make sure you set another one for a new high. If that's happening, it can trigger a swing-based mean reversion style trade. That or geopolitical tensions, I think, are probably the two big catalysts that we're kind of potentially seeing here in the markets if they do happen. Copper fell off over the last 24 hours, so Dr. Copper looking still quite weak. If we jump into the 2 hours, not much notable trade here, but we found a little bit of buyers. I'm thinking it's probably weak. It looks like it's rejecting. Non-farm payrolls will most likely sort it out. And it's kind of the same thing for the dollar index. I'm looking for the weekly close. Dollar came up, swung the high. I'm still looking for it back to my 61.8 fib and the supply up and these highs up here. I'm going to wait and then be patient to react on this one. I want to know what happens with non-farms. Gold still looks really weak. It actually looks like it wants to go new lows, possibly down into our 1880 level. However, I'm not going to predict it too much. We did see the sell-off, and we talked about this. And actually, if you were trading through the non-farms, that was an excellent, through the ADP non-farm result, that was an excellent entry for a short. So if you got that one, congrats. Maybe you want to break even a trade if you got the right level, but this would certainly need to be managed, I think, into the non-farm payrolls result. And do remember, often this result goes the wrong way first, grabs liquidity and goes the opposite way. So it could be like boom, boom, or it could be like boom, boom. It does tend to go off in the opposite direction. Then after an hour, it switches, or even after 5-10 minutes, and then it goes into what it really meant to do in the first place. Tesla still hovers above. Will this become an island reversal? That's definitely a question mark. I think some day traders will be looking for that. For bulls, though, not much to be concerned about on Tesla just yet, because it held above, and really, yes, it sold off a little bit, but in general, there was no follow through. So could we still be going for 300? I guess the trend's still up. So at this stage, that's probably the better play, unless you see a change, which would mean that you get a gap below probably this low here, 272. I doubt we're going to get that over the next 24 hours, but you never know with non-farms. Semiconductors put pressure on the bottom low here. This was an evening star we talked about in the previous video. Great low close. If you sold it, you're going to be pretty happy with yourself. It went down nice. Actually gave you a 1-to-1 style trade. It's a good position, nice replicable kind of position there. It's what I like to see. Will it go further? Well, we need to get a new low under this point here. So I think that if that happens, then we move to here, which is our dotted line. I'll just quickly put one here so you can see what I'm talking about, 146.81. And then if we get underneath that zone, then we're pretty much on a swing short here for semis to fill at least this gap, which is 131. So things could happen pretty quickly here if they choose to. And if you want to go with the market, it'd be about 11.36+% on semis falling off. For a bull, all you're looking for really is just new high. You get a new high, considering the way that this is trapped in, that would be squeezing so much liquidity and you'd probably be pretty happy with yourself. So look, there is a bull scenario if we get above those areas again, because they will have trapped some bears. And I think a lot of even pro traders would be considering really big moves here over what they've just seen, especially after if we get non-farm payrolls to go further bearish. And that's because we had that really good island reversal on the SPX. What about defensives? Well, utilities here was, I would say, lackluster. It gave back pretty much what it put on the day before, but we did see staples hold very firm. Same with healthcare. So they both really stood up the test of time here in comparison to the others. They were only down a little bit on the session. If we go to the ASX 200, new low. I've been saying this for a while. I've been very negative on the Aussie market and it's paying dividends, but it's not really because we're doing anything really different to others. We just understand that the Australian market is banks, so financials, it's energy stock, and of course it's materials. And at the moment, most of those are not liking what we're seeing with demand destruction. So this is really a demand destruction style market sell-off. And I'm kind of looking still for that to go down to those 6900s. We'll see whether we can get it. Let's have a look at the German market now. And what we'll do is we'll actually need to load up the right one here. So make sure you always do that. German 40. And you can see this is actually going to be a Wyckoff style distribution. Now, I was almost going to put this at the top of the video because it's a pretty big deal. And you can see here that it's got a nice UT or UTAD up here. You've got that buyer's climax. You've got it coming down. You've got the rally. You got the swing. You got the move. You got the new low. This is a problem. Definitely don't like that. I'm not a fan of, I would like to see it swing low, then pull up, then look for further shorting. But that's actually a swing. That is a proper, setup there. And the question just really becomes, what is that? Because at the moment, you haven't broken all the demand. And that is a little bit of a problem. I'm going to be very interested to see how this trades over the next 24 hours. We'll report back here. But the German market at all-time highs into a month that's going to give us an interest rate hike and also further tapering. Remember, one of our videos this week was about central bank tapers and the fact that the ECB was going to double tapering this month. So because of that, well, maybe we're a little bit too frothy. TD9 as well on the weekly, which means we're probably getting exhausted. There was the chart I was meant to have with the update. So there you go. I did have it there. And US 2000, too many tabs. And the US 2000 here coming back down to the demand and finding some buys, but it's sold quite aggressively over the last 24 hours. There was a trade that went through here of note. It was actually one of the biggest trades of this year so far. So I've been tracking a few of these, and I think it was the third largest trade of 2023. Now, I don't know whether it's a sell or a buy at this stage, but I think considering the structure and the next 24 hours and maybe even the next couple of days, we're going to find out whether it was a big player getting involved in the short end or the long end. There was some buying. Maybe that's just because, well, someone sells, someone buys. So obviously it was a large transaction, but I'm just reporting it. Big transaction. Is this a double top? I think we'll find out very soon. Big key level down here at the 1800s, non-farm payrolls. Maybe that takes us there. But I'm going to watch the Qs and the SPX the most. Classic island reversals. Are they too classic? Maybe. Maybe they are. So we have a gap up. We have a gap down. Yeah, good little kind of day trade there, or even initial trade if you were having a go at it. We talked about going at the day before actually in our private community with a stop above the high. It worked out pretty nicely. And then we were thinking for the gap fill on the SPX. So obviously SPX is usually the better trade than the NASDAQ. But here's the Qs. You can see that the big movement You can also see that it came back to those high points. But if we actually look at the NASDAQ futures, they actually spiked straight into the high. So rather than the Qs, look at that. The NASDAQ futures spiked straight into the high, sold off, rallied up a little bit again from that point. We had a look at the SPX before at the start of this video, and we'll just go back over that. So we've got a weekly Bollinger, and it's outside. That's usually a sign of a bit extended market. The weekly 20 moving average, which is the central Bollinger, is super far behind. So that's probably due a bit of a pullback. But then we look at the daily and we can say, well, yes, that is a classic island reversal. Absolutely. We have here the gap up, the gap down, but we didn't really close on the lows. In fact, we found a rally near the end of the day after we filled this gap, which we can now get rid of. So that was my target zone for this initial little sell. Interesting, it picked up so much. So maybe we need to go and have a look at the futures here. And we'll go to the futures just quickly and check it out. So the market sold off directly in quite aggressively, and then it filled that zone, and then it bounced back up. I'm not too sure exactly where we should be shorting this one now because I'm not sure if it can fill that gap. Usually with an island reversal, you don't really want them coming back too much. So the idea is it's a gap up, it's a gap down, and then if there is a rally, it's met by pretty much sell demand. So you could put like an alert underneath the low, and maybe that's giving you some extra confirmation that there is further slingshot potential back down to the 43.37 and then maybe even lower. Now, the buy the dip reflex that everyone has is massive. So remember, if it does get above this high, 45.30 is kind of like the level I'd be looking at. And the reason why is because there will be so many people getting squeezed above this high. So maybe it's, I could see why people like this zone. I could also see it sit around here. Non-farm payrolls goes out. This is a scenario. A lot of you asked for scenario kind of questions. That's a scenario I'd be playing my mind for the bull end. For the bear end, I kind of played, back into this high here and then maybe look for the sell to get the risk reward. Underneath the low could be further momentum on small time frame trades down to there. They're kind of the types of scenarios I'd be playing out. But it certainly is a fully fledged island reversal, and we've seen them before, and they've been pretty consistent on the SPX in particular. So that's something we are watching. What about Bitcoin? Well, here we go. Look at that watch reaction here level. We spiked the high. There it is, 31,430. We spiked the high and then bang, straight down. Look at that, closed right on its low. That's dirty. And that is a very dirty style position. And if we now move below here and we hold below it, you'd have to think people are crippled in this area from buying, and that's going to be bad. Now, you do close above here. I think that's really going to be momentum. I actually like to wait for these types of things and then react to them. It's a big part of our day trading masterclass. If you're ever interested, look at the description down below. But really, it's all about reaction. I don't really think prediction necessarily is the best place, especially with so many traps in these markets. If you can see a trap, you know how to replicate a trap. That's the big one. So this is got the signs of a few traps starting to appear. I'm very interested, as I've mentioned before, if we get a major close above 31.5, I feel like Bitcoin's on a monster run at that point, just because it'll get all that FOMO and all that greediness coming in. But we're still stuck in the range, but what a daily close. I mean, that daily rejection is big. It closed on its low. It's a pretty weak looking candle, but if it managed to now close above here, I'd say it's going to keep ripping for a little bit because so many people will get squeezed on that one. And that's a hypothetical should it occur, but that's the thing. We're reacting to it then. We're not actually predicting that's going to happen, which I think is a big deal. Let's move over to the news. So as we mentioned, we've got Friday non-farm payrolls, which comes out 1 hour before the market actually opens. And then we go through into next week, which will have a whole bunch of discussion points. And then we've got core CPI and CPI coming out at 8:30 a.m. on Wednesday, July 12th, just before we get the big earnings kickoff through the banks. If you're interested in this stuff, if you like these markets, then make sure to subscribe. And of course, smash that like button, guys. Thank you so much for watching. We'll see you very soon. So it's that time again to draw the June competition giveaway results. We've got Yogesh winning the 4th prize. So congratulations, Yogesh. Expect to see this email in about a week or just under a week. You'll get all of these updates. Timur, you win the 3rd prize. Congratulations. Then we've got the 2nd prize draw, which is going to be Andrew. Congratulations, Andrew. And for the final prize, the group mentoring, I'll see you guys very soon, whoever this is George C. So congratulations, everybody. That was a winner. Thank you very much for entering. We almost had 1,000 people enter. And of course, we'll hopefully do a giveaway soon just to say thank you to everyone that's a loyal supporter and watcher of this show.